Right, motherfuckers. Today marks an important day. It's the 7th of May, 13 days before my birthday, before I turn 21. And I've been meaning to piece together a model. The model that I really got working on last year was, I called it Model 24. Um, Let me just load it up. So, my Model 24 required two things. You need a sweep of a higher time frame, high or low. What determines a higher time frame is at some points 30-minute, but no, I just stick to the 1 hour, 4 hour, then the daily and the weekly. If you have access to a 15-second chart, since price is fractal, you can do the same with I think in 15 minutes and 5 minutes. But for the sake of the 1 minute, the 15-minute sweeps do work well here and there, but you don't really get the bulk of the move. So that was the first bit required. Wait, why did I even exit this thing? So that was what you first wanted to see. Then you needed to have an inversion fair value gap. Okay. Then after that inversion fair value gap, then you wanted an order block or a propulsion block. Then it's above market equilibrium in brackets to 50%. Sorry, above or below. This is also now just so that this year was model 24. Super higher time frame, higher low, hourly, 4 hour, daily, weekly, inversion fair value gap, OB or PB. All right, cool. So that does work quite well. For example, here you'll see 11 o'clock starts here, right? On this candle, the hourly high is this here. When the market trades above it here, technically we sweep the 11 p.m. hourly high. You don't get a model here. The market runs up higher, and you see this pussy here. We close past its low there with a propulsion block. You could also use, since there's a series of highest up close candles, you could use these two here, as there's technically a swing low here. So you could use in that low to that high and mark that as your equilibrium. But you also have this a propulsion block here. Market trades there. And so after I discovered this, the main reason why was because many a time I was always looking for market structure shift, but I wasn't getting market structure shift. Right? So yeah. Anywho, so this here became a prime example of model 24, because if you took this scan, even if you use this low, which I wouldn't recommend, you gotta go to the 5 minute and find this price leg. So it would likely be from there. So you see that when you sell here, you're selling at 75. So let's drop this quite a bit. And so that was your inversion fair value gap there. Bearish IFEG. That's model 24. Okay. This is 1 minute time frame for all PD arrays used in finding entry. meaning 1 minute propulsion block, 1 minute a propulsion block flip, or I guess order block flip here, 1 minute bearish inversion fair value gap, as well as the inversion fair value gap here. So this is your standard model 24, and I'll download this image and put it here. Right. So along with this, if we go to the next, so see here, this is the standard, and in this case, it would have offered quite a good return, right? Now, although this is present here, you must note that this is all happening before 2 a.m. So I don't get any, I can't trade before 2 a.m. because that's not within the kill zone. Although many a time I've heard Michael saying that, again, that like already from 1 a.m. you should be there just watching it because it's going to do something. It does really offer these brilliant shorts here after clearing that 11 p.m. high. So one time frame. Now, why this one is now called Model 24 Ultra? It's just gonna blow your fucking mind, bro. Someone is gonna think that this level here is it's such a perfectly drawn, I would say, resistance level for the sake of people who don't know, these concepts or whatever. Right? So look at this low. This low clears some sell side. It's fantastic. Then you note that one, just a bit lower. Then you get that one, again, just a bit lower. Then you get this level here, where it's just a bit higher than this one, but still lower than this one and this one. What does the market do? Trades higher. And you say, yes, but why draw this box? Why is this box placed? Because now it just seems like I'm cherry picking it, because why have this random box here? Because it's like overlapping on this wick and the body here, and it's not at this volume imbalance here either. So what's the purpose of it? It's not this fair value gap here. There's nothing here. This is why it's called fucking ultra, bro. Hold on, let me see what uh VIX 25 is doing. If it's willing to clear that high, like the daily buy side before selling off low, I'm fine with it. But until I see VIX 25, I'm talking about the present market now, until I see it clear a high where it's actually, say, time-based liquidity and I can find an entry model, I'm just not interested. So this one here makes me lean towards not looking for these 5 to 10 odd trades, but these 3 odd trades, right? The sole reason being, if I were to go, so after these highs, so now we can see that cool, there was a low made, then we swept the low, then they made a higher low. So the market is, it can go higher, and you've also got this fair value gap here. So you do get a market structure shift and this 2024 model, but not the entire purpose. You go up to the 5 minute, voila, it was a 5, and I saw this late. Because on this, so when this candlestick was still forming and it was up here, I was like, okay, cool, so it's not going to make a CB. Then I went back to the 1 minute. I didn't pay attention to this 5 minute close. But when it closed here, I drew it out and I was like, oh shit, let's see what the 1 minute did there. And the 1 minute closed above it here. So I was like, bet. The rule is you need to be buying at the low end of the fair value gap. So that becomes the low end, and it's the most recent 1 minute low, which has to be this low here. So I marked out that low there in terms of sell side. And then I saw these relative equal highs here. as well as this unfilled fair value gap. So I was like, cool beans, cool beans. You can extend that out there, and look what you get. So that's it. 1 minute close, and yesterday as well, there was a brilliant, brilliant trade opportunity that was almost that it was just fantastic, bro. But again, it doesn't clear the exact low I want. It was a case of there's two 4-hour lows, right, right next to each other on Nasdaq. The market dumps extremely low, clears. Well, why am I trying to explain it? If I can just show it. I just go to Nasdaq 4-hour. If I delete all of this and this, these two candles, this low 19,655.10, this low 19,657.6, this low 19,655.15. It was zero point 0.5 points away from this, but it cleared this low. And if you went to the hourly, then you would have found that it cleared this New York, sorry, this Asian low, but left this one intact. So technically, if you look at this BSI here, we just ran that all the stops there, and then it absolutely just shot higher on the 1 minute. Sorry, so this is at 4-hour that I drew out. Then there was that, and then, well, this is the beauty now. So if we go back to that trade from yesterday after we just ran that low, you see this 5-minute gap here, cool. But then if you go down to the 1 minute and you see how price actually traded in there, no, it wasn't there. And you see the most recent price doesn't close past it here on the 1 minute. So it comes back like, cool, I won't enter yet. Closes past it here, makes a bullish mitigation block. Your stops could be right there. Entry in the low end of the gap, so below that 50. And an entry there at 19,705 with a stop loss of 15 points, including spread, was an absolute belt of a trade. So that's why I'm saying that this is the logic, because many a time I get caught with my dick in my hand for the sole purpose that I'm trading 1 minute inefficiencies instead of just using the 1 minute. It's like the gun needs to come from the 5, right? But the fine tuning, it's like so like the scope is still the 5, but then I use the 1 minute to just get that bit of finer detail in, So, but yeah, now I have to wait again until some point of, liquidity is taken out. Might just clear this high, which is technically a 1 a.m. pre-market hourly high, and then we'll see it dump because it has to come back lower because of this daily imbalance here. But then you've got such smooth highs here on the 4-hour. You see these, and again, this is another case of where it clears this high. So if you went to like the 1 hour, see how because it has an imbalance and one runs that high there, leaves this one intact. I used to get trapped and be buying up into that over here. Then it just fucking dumps lower. So yeah, that's all I wanted to share. I'm going to make this stream private now, and then I will upload and react to it on January 1st, 2026. Oh, my new watch gonna cost 500. Don't trip. Yeah. Fuck, it's lonely. Well, there goes my hat. I have to go buy some washing powder I need to come wash my shit. Had it down, wash shit.